Hello traders, Gary Wagner here. Just after 1 o'clock in Honolulu, 7 o'clock in New York. It is Thursday, first day of July, 2021, and this is the daily report for gold and silver. Although we saw a modest gain in gold, a downtick in silver, the technicals are clearly indicating the potential for lower pricing in gold. We'll talk about that in detail when we pull up our charts. That will come over after the price board, which begins now. Interesting action in the financials markets, including the precious metals markets, as well as the US dollar. Gold did tick up today, $5.70, about 0.3%, and is currently trading at $1,777.30. That's all in light of dollar strength, which gained a little over 0.1%. It's currently trading at 92.55. Silver, on the other hand, continue to decline. It is trading over $26, but after factoring in today's 5-cent drawdown, is fixed at $26.14.5. That, of course, is Space's the most active September contract, and copper also traded lower on the day, giving up 4.5 cents, and is currently trading at $4.24 per pound. This first chart that we are looking at is of gold futures. It is an area chart based upon closing prices only. On a technical basis, there are a couple of studies within this that allude to the potential for lower pricing ahead. First, it is the fact that when we look at this chart and this recent low, it is below the former low. Of course, we have been in a defined and pretty steep decline in terms of pricing ever since market forces took gold to 1920 on an intraday basis and just above 1900 on a closing basis. The second thing, and I believe this is the most alarming thing on a technical basis, is our moving averages, the 100, 200, and 50-day. Of course, in red right here, you have the 200-day, you have the 50-day right here in green, and that is followed by the 100-day. Obviously, as the market rose, the 50-day crossed above the 200-day moving average and came closer and in essence looked to cross above the 50-day. However, this recent decline has put a defined bias to the downside even on the longer 200-day, and it is quite possible that we will see a death cross, meaning the 200-day moving average will cross below the 50-day moving average. That would, of course, all turn around if we saw a major spike to the upside in gold, but all things being equal, we have been seeing a series of lower lows recently, and we have seen the 200-day and the 50-day come into alignment, appearing as though the 200-day will cross below the 50-day moving average, and that would be a long-term bearish signal for gold. We have converted the area chart into a daily candlestick chart. When we look at that and define, first of all, the double bottom and the rally that followed, we can see that the moving averages corresponded slowly to the rise, with the 50-day really kicking up about the 1st of May, and slight moves in both the 200 and 100-day, which puts the most important moving averages, the 50 and 200-day moving averages, at a crossroad. If we see continued downside pressure, obviously we would have a death cross with the 200-day moving average crossing below the 50-day. The 50-day is going to react much more quickly, and we would see that also turn down. But this is something that we definitely need to pay attention to, especially with tomorrow's jobs report. And that is why I remain cautious to be bullish in terms of gold pricing, because in order to really become bullish, we would have to see a series of higher highs when we compared them to the last high, as opposed to lower highs, which is what we have seen in the last couple of weeks. For that reason, we are maintaining a neutral stance with no active trades in gold. As far as silver goes, it remains in a tight and narrow trading range. We can define major support really at the 200-day moving average, while we have had intraday moves below this moving average on a closing basis over the last couple of weeks. Silver has remained above this key and critical price point. In terms of resistance, the first level comes in at 26.25, considering that the 200-day moving average is at 25.80. You can see what a tight and narrow band we are trading in. All of the opens as well as the closes are contained within this narrow range. We would need to see a break above 26.25 to be buyers. We would look to see the market track lower if silver broke below its 200-day moving average. Then the next target would be the 78% retracement. We're using a much shorter data set from these highs at 30.33 down to these lows at 23.71. We have to remain neutral unless we break above or below this tight and narrow trading range that defines silver pricing. This is me, Gary Wagner, wishing you, as always, good trading. We will talk to you tomorrow on Friday for the weekly wrap-up and review before the extended 3-day holiday weekend. Bye-bye.